Hey everybody, this is Brent here, and if you are a business owner with an S corporation, partnership, or a single member LLC, I'd like to talk to you today about a brand new tax called the pass-through entity tax. Now, this is a good tax, and it's hard to believe that any tax could ever be a good tax, but if there was one, this is one, and let me tell you why. So basically, at the entity level, right now, any entity that takes a tax deduction, they're basically only writing off that $175 that's owed to Kentucky, and they're taking off their local tax payments, and that's all you're taking off on your business schedules. So when you pay your state taxes, you are not taking a business deduction for that. You're basically writing it. It's a personal expense. It's an itemized deduction, but few people get a benefit for it. What this does at a high level is it allows you to take that personal state tax payment, pay it through your business, and get a business deduction for it. It's pretty awesome. So let's talk more about it. So some background real quick. In December of 2017, Congress passed the Tax Cuts and Jobs Act, and this made a lot of changes to tax law and tax code, one of which was to increase the standard deduction. And by doing that, what that meant is that all of a sudden fewer people were able to itemize their deductions. And of those that did itemize, they put a cap in. They said, okay, if you're going to itemize, you cannot take off more than $10,000 of your state and local taxes. And that's it, no more. So when you add up your house taxes that you pay, your car taxes, and any taxes that you or your spouse might pay in through a job at the state or local level, it's very easy to hit $10,000 and have more taxes than that. Yet you get no benefit. Whether if you're itemizing, you don't get a benefit, or if your standard deduction's higher than your itemized deductions, you're not getting any benefit whatsoever. So basically, a lot of legislatures around the country said, we're tired of this, the heck with this. They created a brand new tax called the pass-through entity tax, and it's kind of a workaround because, again, it allows you to take that state tax payment that you're getting little to no benefit for and write that off as a business expense. It's really cool. The IRS did officially come down with some guidance in 2020 that said, okay, if you're an S corporation or you are a partnership, you're good, you can do this. They didn't talk about single member LLCs because they didn't envision that. We're going to come back to that here in a moment. So how does this work? So already you're paying $175 to the state for the privilege of having your business, and you're paying your local taxes. If you go this route, it gives you additional savings. So for example, let's say you make $150,000 in your business. Our state tax rate this year is 4.5%. So you're going to write a check to the state for $6,750, and you're going to write it at the personal level, and you're going to make that $6,750 payment through 4 quarterly estimated tax payments. And that's the only benefit you get is if you itemize deductions. And as you can see, if that payment alone is $6,750, you can add your house payment to it. Your house taxes to it, a little bit of car taxes, and you're pretty easily at that $10,000 limit. You tack on any state and local taxes that your spouse pays, and you're already above it. But again, if you don't itemize, you're not going to get any benefit. So what you would do here is, under the pass-through entity tax, it's an optional election. We would elect into this tax, and you're going to say, okay, $150,000 net profits from the business times 4.5% equals $6,750. You're going to write a check from your business bank account for $6,750 to the Kentucky State Treasurer. You're going to take that off as a business deduction that reduces your taxable net profits from your business. Plus, it's going to reduce your self-employment tax if you're a Schedule C or if you're a partnership. So then you're going to claim a credit on your personal tax return. And you're thinking, well, I'm writing a check at the business level, claiming a credit at the personal level. What's the point of all that? The point of that is if you're in the 22% tax bracket, 22% times $6,750 is $1,500 of tax savings. Plus, you add the self-employment on top of that, that's potentially another $1,000. So that's about a $2,500 tax savings on that $6,750 that you were already writing and paying to the government, and you're not really, or odds are, not getting a benefit for. Pretty cool. It's pretty cool. Plus, if you act right now, we're here at year end, the Kentucky legislature made this retroactive back to 2022. So we can amend your 2022 return, do the exact same thing for last year's taxes. And if you pay all this before December 31st, you're going to get a double benefit. So in that situation, you would either get, somewhere between $1,500 and $2,500 for the current year. But if you do it for last year as well, you can add another $1,500 to $2,500. So what that means is you're going to save anywhere between $3,000 and $5,000. That's not too bad at all for something you're already doing. So it's really cool. It's a really cool option. It is an optional thing. You have to do something special to elect into it. We can do this in tax season if you want, but if you want the savings right now, this year, this is the time to act, and we need to talk. A couple tips real quick. If your business has a loss or very low profits, it's probably not worth it. The benefits of going through all the paperwork is just not really beneficial. But the more profitable you are, the more beneficial this is going to be for you and your business. Now, I want to talk very quickly. This is black and white for S Corps and partnerships. It is a gray area for single member LLCs. Kentucky does say a single member LLC is a pass-through entity under state law. So the IRS, however, when they blessed off on this new procedure, they did not realize that any states would ever pass this for single member LLC, so they didn't address it. So right now at the single member LLC level, it's a gray area. Can you take it? Can you not take it? That's something we should talk about in person. But this is a really cool option. So I want to go ahead and get the word out to everybody. So if you have any questions, give me a call at 502-867-1040. Again, that number is 502-867-1040. Let's talk about your specific situation, see how it applies to you, and let's talk sooner versus later because time is running out on this year. Thanks so much for listening, and I hope you guys have a great day.